God bless everybody. Today it is April 10th of 2024. This is a quick market update. CPI came out today, which was extremely hot, and that has sent the markets into a frenzy. Also, you have PPI numbers tomorrow, and so that's going to also play into this factor. And I believe you have bank earnings coming in on Friday. So a lot going on. Today was a bad day for CPI inflation. That has sent the bonds into a melt up, has sent Bitcoin into a melt down. Gold and silver are somewhat steady in general, and the 30-year rate has moved up also. And so everything that you are spending your money on loans and debt has just gone up again. And so this is extremely inflationary. We got the 2-year Treasury up almost 17 basis points. Okay, this is a huge jump. And that's what I mean. The CPI number was extremely bad. Super core is up. All inflation across the board is up. There was no major indicator on exactly why everything was up, except all indications were that all inflationary indicators were up at this very moment. So you got a 2-year bond that's now pushing 5%. Okay, now I've talked about how the Fed is following the 2-year Treasury. They're at 5.5 or so. The 2-year now is 4.907. So this is a real problem for them because they won't be able to cut in June or anytime soon. I'm telling you, they won't cut at all this year until it fails, and then basically they're going to cut massively because it will fail and they'll have lost the battle. Now you got the 10-year up almost 12 basis points, and so these are huge spikes in these bond rates, and this is driving your rates on your credit cards, auto, commercial, homes, and everything else is going up. And I just saw that the 30-year fixed on average was over 7%, and in general that will be going up because there's a lag indicator there, and so you're going to watch the 10-year move up, which will then force the 30-year to probably end up around 7.75, moving closer to 8, and now we're working towards that double-digit number that I've been talking about, and how this is going to start to end up being possibly back in the 70s again when we had double digits on home loans and things like that. So the number today that came in was a consumer price index, which measures the average change over time in all prices paid by urban consumers in the market basket of consumer goods and services. Indexes are available for U.S. and various geographical areas. Average price data for select utility, auto, fuel, and food items were also available because they strip out anything that matters to you guys. And so it's amazing that they have this high core inflation and different things like that. Super core was like at 4.8, so it's gone way up. All kinds of things going on here, guys. Shelters going up. But overall, the board, all inflation went up. And so this is a real problem, and Jay Powell can't push back on this. He's basically going to have to come out and be extremely hawkish and say that they're not going to be able to lower interest rates. And so you're going to have these higher interest rates for a longer period of time. And if this 2-year rate moves up even further, he might have to raise rates. So tomorrow you have the producer price indexes, which basically the program measures the average change over time in the selling prices received by domestic producers for their output. The prices include in the PPI are from the first commercial transaction for many products and some services. And so this is what I mean. With inflation moving everything up, all your components cost more, and so your producer price indexes then rise, and then that causes inflation, and that's a spiral downward as we move forward. And PPI could be extremely hot tomorrow also, which would then potentially cause the markets to react even more severely than they are today. So this is forcing your inversion to gap a little bit. But what's happening is your 10-year is going to start to melt up over the 2-year, and then what will happen is this will uninvert, and the trend is moving up, and so it is slowly uninverting. It will finally uninvert. This is almost a 2-year inversion. When it does uninvert, it will break, and then the Fed will have to figure out how to deal with that. Well, let's say your 2-year melts up to, let's say, a 5 or a 6, okay, percent rate. The 10-year moves up over that, and you end up in a potential nightmare scenario where the 10-year goes to, let's say, 8%, which then forces all your loans above 10%, and now you're in double digits. And when this thing uninverts, and it always does, you go into recession and it breaks. And in this case, it could actually be a depression because of the liquidity that they pushed into the system. As you can see, commodities of all kinds are being affected by this. Bitcoin has dropped under 68,000. I've talked about how it could potentially go to 60,000. If it falls through support, it could potentially go to 42 to 40,000. Could go lower than that depending on how the markets go, and if we have a geopolitical nightmare over in the Middle East, which could happen anytime today, possibly even, that could even send these markets into a worse condition than they already are. Now, gold and silver are down due to the dollar strength today, and that's causing havoc on the Japanese yen. The yen has gone to 152. If it goes to 160, they're going to have to do an intervention, and that's a real problem for the Japanese. We're watching metals go down a little today, but as you can see in the last 6 months or so, there has been a really nice pop in general on metals, and so you've got gold at 2341.78, which is at almost an all-time high, as well as silver is at 2806, and that is starting to move up tremendously also. I always say silver is probably a better purchase, and in most cases most people can afford 1 or 2 ounces of silver in general over time to diversify their portfolio. And I am not a financial planner or anything like that. That is just my recommendation, that metals never seem to go down. Now, as we get into a biblical scenario, God tells us that the metals won't matter, and basically everything material will go away, and so it doesn't really matter. It is a hedge against potential failure, and as we move into the beast system, it could be potentially bartered for things to keep you off the beast system. So now this is a lag effect because this is on April 9th, so your 30-year fix are around 7 on average, but once you get into the regional banks, they go up to about 7.5. With this rate change due to core coming in hot and different things like that, CPI coming in hot, you're going to watch these push up to approximately 7.6, 7.75, moving closer to 8, and this is causing all kinds of issues. Actually, your 15-year fixed loan is a much better loan to take at this moment if you can afford the additional costs. So things are getting really ugly out here in the markets, guys. Like I said, the B system's getting ready to come in. They're going to reset this bad boy before long because they cannot continue paying on the interest. They're paying, over $1 trillion just in pure interest every year. And then Joe Biden comes out with a $7.3 trillion budget for the next, it's ridiculous. Anyway, keep an eye on everything, guys. PPI comes out tomorrow. That potentially will come in hot. That will then change the picture again, and you could see another melt up on the bonds. That's a real problem. Also, you have bank earnings at the end of the week here on Friday, and so that's going to affect potentially all these different numbers and things also. Um, so definitely keep your eye on this, guys. These are not numbers that are going to go away anytime soon, and they're going to be with us for a long period of time. And Jay can't do anything about it because he's fighting a beast that he can't really control here. And with this amount of liquidity and treasuries that they're pushing into the system, this is going to cause all kinds of problems. And because they can't lower the rates anytime soon, that's going to force Janet Yellen to keep printing more and more on the treasuries and the bonds as they're trying to sell off the bonds and stuff and reduce their balance sheet, which they can't easily do if they keep printing additional bonds at the rate that they're doing, which is approximately $1 trillion in bonds per 100 days. So this is an equation for destruction, guys, and they are going to destroy the dollar, and they will reset the system because the new system is getting ready to come in, and we have a beast system happening. Keep an eye on the end of Ramadan. You got a potential red heifer sacrifice today. I don't know what time that could happen or if it will happen at all, but it is a potential problem. And if you have a geopolitical nightmare over in the Middle East with a breakout of Iran or a Hezbollah or Israel does some major attack, or Iran literally attacks Israel in their own country, this could break out and the markets could go insane in the next few days. So God bless everybody. Be safe out there and keep your eye on everything.